What's up, you guys? It's Matt here. So I wanted to talk to you about trading with Fidelity. Now, I know I have a video that's how to trade with Fidelity, beginner guide to investing. And a lot of people said that that video was great. They love that video, how to go through different methods of trading. But some people do not understand the trading slip in general, understanding what they should do, how they should buy those positions, and if they should sell all their positions at one point, or how they sell short, and all this other stuff. So there's a lot of detail that goes into the trading slip, and I wanted to dive into that today so that you do understand exactly what's going on there. Before I get started, make sure you hit the like button. Also hit that subscribe button for more videos like this one, and get your 2 free stocks with Webull down below and 1 free stock with Robinhood. All right, so let's go ahead and dive into this. So I have my trading slip up just to really understand exactly how the trading slip works. This is what I'm going to do. I'm going to take you through this. Now, when you have a trading slip, depending on any investing platform that you have, they should have a detailed definition or a breakdown of how to use their trading slip. But I want you to understand some of the key points of a trading slip. Now, with Fidelity, it makes it easy because they have this Help Me Trade button up here. Now, the Help Me Trade button will literally take you through the steps in order to trade if you are looking to do different trades. So you have your account here, set up any account you want. You can hit next. Then it's going to take you into the trading transaction, the type of transaction, and you have stocks, ETFs, mutual funds. I really like to stick to these areas, mutual funds for more of my Roth IRA and some stocks and ETFs, but stocks and ETFs mainly for my main accounts. So let's click stocks and ETFs here, go to next. You're going to want to select your symbol. So they're going to say, hey, what's your symbol? I'm going to select Facebook and then hit enter. And then it's going to take you to the action. So you see the price here, you see the change today, you see the bid, the ask, all of those different types of things. And then they're going to ask you for the action. So whether you want to buy, sell all shares, specific shares, really you want to stick to buying and selling. Anything that's too complex, especially when you're getting started, is not something you want to get into. I wouldn't recommend going into options at all. I would recommend just staying with buying and selling. Now, you can venture into short selling, but that takes a little bit of skill. Some people are scared to do it because there's a lot of risk there. But buying and selling, let's say we want to buy, and then we're going to get our quantity. It's going to tell us what quantity we want, and I'm going to select 6. Then once I hit that, it's going to tell me, hey, what's your order type? Well, you have market order, limit order, stop loss, stop limit. Now, I haven't used stop limit too much. I always use a stop loss. I use market orders. I use limit orders depending on when I want to get in. So market orders, really, it's just saying, do you want to get in? We'll get you in the next available price. It's for people that are everyday traders that just want to get into a stock price. They don't care about hitting its lowest low. They only care about getting in at a lowish price and getting out at a highish price. That's what it's all about. Limit orders are different. Most people that are day trading or swing trading use this because they want to get into a stock at a certain price. Some people that are long-term investors also use this that want to get in at its lowest low. Once it does get there, they'll get the alert. They'll have that limit order out there and they'll get those positions. So that's what a limit order and a market order is all about. A stop loss really helps you out in so many instances. If you use a stop loss, you will minimize the amount of loss that you could have. So if you, instead of getting $100 of a loss, maybe you'll have $20 of a loss because you're setting that stop loss price. So if you wanted it to stop loss at, let's say, a $20 loss, it will sell all of your positions at a $20 loss instead of pushing it further down. Now, this is risky for some people because they think, oh, well, the stock price is going to go back up. And then eventually it does go back up. And usually it's because, like, if you have high positions, you sell those positions and it does go back up. That's because someone saw you sell a large chunk. So then they're buying into it, which means the stock price goes up, creates more demand. It's really tricky. So don't get caught up on the fact that the stock price went back up after your stop loss hit, because it will happen. And sometimes it'll go a lot lower and then you'll be satisfied with it. But still, don't focus on that after the fact. Just do your research, get into the next position, and then, trade as you go. Stop limit is very simple. It basically just does an automatic limit order. It triggers an automatic limit order when you've reached a certain price that you've set. So let's go ahead and set a limit order here. And I'm going to enter the limit of $270. That's where I want to get in at. Now it's going to say basically time in force. Let's see if it brings up the full thing. So yeah, it brings up everything. So let's go ahead and talk about this. So you can have the day. It cancels at the market close, which is a good thing if you don't really want to worry about too many orders that are out there. You have good until cancel, basically 180 days. That's when it'll cancel. But you have 180 days. So if you're looking to get to a certain price and you know it's going to get to that price eventually, at its lowest low, then you can get in there and have 180 days to get to that point. Fill or kill, fill completely or cancel. So this is something where people use with like really large trades, as they say here, somebody that wants to do 10,000 shares of something or 1,000 shares of something. You fill all of it or you cancel the whole order. That's always a good thing, especially if you're looking to buy a lot of shares at one point. Now, if you're a beginner, you're probably not doing that because it's very stressful to have to worry about that many shares, because if a change, let's say you have 10,000 shares, right? You have a change in $1. If that's a gain, that's $10,000 that you gain. But if it's a loss, that's $10,000 that you lost. So it's very tricky to have to go through the thought of holding on to that many shares. Immediate or cancel, fills as many shares as possible and cancels the remainder, which is obviously a good thing. Anybody that has large trades that wants to get 10,000 shares, maybe they can only get 5,000 out of the 10,000. That's okay, but then they cancel all the rest because then they don't want any risk of the price going higher or lower wherever they're trying to get into. On the open, fills only on the opening price. On the close, fills only on the closing price. So these are the methods that you can do. I'm going to say good until cancel, and then you can set an expiration of 1 business day before, 2 business days before, no alert. I'm not going to have to do that. Because I don't believe it's going to get to that point. Now, I'm not going to buy anything. Obviously, I only have $4 available in this account here. Everything's over in Webull for me. If you want your free stocks with Webull, make sure you check out my links down below. And then you can get the conditions to where you have no conditions. Most people will have no conditions. Fill all shares or none of the order, which technically you can do in other areas. But you can set the time here. I forgot to go through that. You can set the actual expiration date if you want the expiration date earlier than 180 days, and then also the time to, sell those positions, or cancel the order there. So that's really understanding the slip. I mean, the slip is probably the most complex part, because sometimes you're like, I just want to trade. I really just want to trade. Well, if you just want to trade, literally just select market order, and it will give you the least things to select. And you just need to know whether you're going to trade on the open, on the close, or the day. What do you want to do? So it's very simple to do a market order, but if you're looking to profit the most, understand limit orders, understand every other type that you could possibly do, then you can move into short selling as well. So this is the slip. Hopefully you understand it. Hopefully it helped you out in the long run. And I hope that a lot of people get started investing, whether you do it with Fidelity, Webull, Robinhood, Charles Schwab, whatever you do it with. I hope that you get investing, because investing is a key part in being able to secure your future. I know that if I end up dying, or anybody else ends up dying in my family, then we will be set. You don't have to depend on my income. I don't have to depend on anybody else's income. It's all about the fact that you're going to be set to be able to take care of your family for the rest of your life. You never know what's going to happen. You can get to 65 and say, oh, I have a 401k set up. I have all this stuff, but there's a lot more than that. You need to invest early, understand your different parts of investing, not just saving until retirement, because it's not going to help you out if you don't get to retirement. So that's the trading slip. Let me know what you think about this video. Let me know if you want to see anything else on Fidelity. If you want me to go through Active Trader Pro, I will go through that. Obviously, I haven't been doing much day trading. It's been more long-term investing, dividends, all that stuff. So make sure you hit the like button on this video. Make sure you hit that subscribe button. Make sure that you get your 2 free stocks with Webull and 1 free stock with Robinhood in the links down below. That helps me out a lot, and it'll help you out. And also hit that notification bell. Right there, there's a little bell next to subscribe. If you are subscribed, hit the notification bell. I need to notify everybody that's subscribed to my channel, so hit that notification bell. But that's my video, guys. I'm going to get out of here, and until next time, I'll see you guys later.